Assalamualaikum madam, a warm greeting from group 4. So today our group will be presenting for our assignment. So my name is Rahim and I'll be covering the introduction part and I'll keep this simple. So now, let's look at the first company. So it is Telekom Malaysia. Telekom Malaysia is basically the nation's main connectivity provider. So it is started as the old telecom department and grew into a key player in Malaysia's digital development, connecting homes, businesses, and communities across the country. Next, which is in the same industry, Maxis, which is also known as Malaysia's leading mobile and internet service providers. So since 1995, it has grown into a major force in keeping people and businesses connected through mobile, broadband, and digital services. So now moving on to the next one, Carlsberg Malaysia. They have been brewing since 1969 and remains one of the major beverage companies here. As part of the global Carlsberg Group, it brings a range of popular drinks and continues to innovate in both branding and sustainability. And last but not least, Heineken Malaysia, founded in 1964. It is one of the top breweries in the country. After rebranding in 2016, it now manages well-known names like Heineken, Tiger, and Guinness, focusing on brewing and distributing these favorites nationwide. That's the little introductions for all the 4 companies we have chosen for this assignment. And now, let's look at the company's SWOT analysis.
Alright, so thank you Rahim for the introduction to the companies. So now me, Danial, Afiq bin Amir Hamzah, I will explain about the SWOT analysis for all of the 4 companies. So first company is Telekom Malaysia. Okay, so TM is basically the big player here. They have the largest fiber network, which is a huge advantage. People really trust the brand. They offer diversified services and they're basically the national digital backbone, you know. But well, there are some weaknesses. TM has high operating costs and it relies heavily on Malaysia market. So any local slowdown can hit hard. Their lower ARPU versus competitors is also something to watch out for. Meanwhile, for the opportunity side, TM can tap into the digital transformation boom, smart city projects, and the rising high-speed internet demand. International partnerships also could help them grow further. And as for the threats, Maxis and Celcom Digi competition is strong. So rapid tech changes are happening and they also face regulatory limitations and cybersecurity risks, which they need to manage carefully. But overall, TM still has a strong position in the market. Okay, so moving on to the next company, Carlsberg Malaysia. So Carlsberg has some solid strengths. They get global brand support, have a strong product portfolio, they enjoy high market acceptance, and their strong distribution system make sure their beers reach a lot of people. So products like Carlsberg Danish, Pilsner, and Smooth Draught are really popular, and their sustainability efforts like the Together Towards Zero initiative help boost their corporate image. However, they still do have some weaknesses. They have limited Muslim market reach since most products are alcoholic. There's also seasonal demand fluctuations and they face FX plus raw material cost risk, which can make revenue a bit unpredictable. As for the opportunities, Carlsberg can explore the non-alcoholic drink segment, basically targeting the younger consumer market. They also can use digital selling platforms and tap into the Asian market growth. On the threat side, they face strong competition from other brands, strict regulations, and resistance to alcohol consumption. But with their strong brand and smart strategies, Carlsberg is still in a good position to grow. Alright, so moving on to the next company, I want to talk about Heineken. So yeah, Heineken has some strong strengths. Again, they have strong international brands, wide distribution, high consumer trust, and benefit from global brewing expertise, which really sets them apart. Brands like Heineken, Tiger, and Guinness, these are well known and people trust them a lot, you know. But their they still have some few weaknesses. The weaknesses I'm referring to is maybe they operate highly in regulated industry. They also face religious restrictions here in Malaysia and deal with high taxes on alcohol, which can actually make things a bit tricky for them. And when it comes to opportunities, Heineken can push Heineken 0.0. They also can use online marketing and highlight sustainability branding and target the young adult market, which is growing fast. So for the threats, there's alcohol social stigma, strong competition from Carlsberg, rising operational costs, and potential government policy changes. Again, with their strong brands and expertise, Heineken is in a solid position to grow further. Alright, so for the last company, Maxis. So Maxis strengths, they offer strong 4G speeds, have premium brand recognition, and diversified service portfolio, and a really loyal customer base actually. This keeps them competitive in the market. As for the weaknesses, Maxis face expensive pricing. Maybe it can turn some customers away. Other than that, they also have weak rural coverage, and there's heavy reliance on mobile revenue, so they're a bit vulnerable if mobile demand drops. For the opportunities, Maxis can take advantage of the 5G rollout. They also can expand in IoT, which is Internet of Things, plus cloud, offer more SME digital solutions, and grow through rural fiber expansion, which could actually really boost their market reach. And lastly, for the threats, they need to watch out for telco price wars, regulatory pressure, tax shifts reducing ARPU, and rising operational costs. But overall, Maxis has a strong foundation and lots of potential for growth. Alright, so that wraps up the SWOT analysis for all 4 companies. So right now I will be passing the platform to my friend Aqimi, who will continue with the next part of our presentation. Thank you.
Hello there, so my name is Aqimi Alhaq bin Mustaffa Kamal. So I'm going to talk about performance analysis, risk and return. Okay, so for the first company is Telekom Malaysia. Telekom Malaysia show a very low expected return of 0.00078 with a standard deviation of 0.0131. Its coefficient of variation is 16.7, indicating high risk relative to return, while its price is stable. The low return make it less attractive for growth focused investor. So that's for the first company. So I'm gonna put the second company as Maxis. So for the second company, Maxis show an unusual high standard deviation of 1.48, but its expected return is only 0.028. The CV, which is the coefficient of variation, is 52.38, suggests very poor coefficient in converting risk in return. Despite price stability, the return is too low to justify the risk. The third company, I'm gonna talk about Heineken. Heineken expected return is 0.00112, but its standard deviation is much higher. It's much higher. It is 0.01485 with a CV of 123.68. It reflects extremely poor risk-adjusted performance, high volatility with minimal return. This make it as unsuitable for risk investor. And lastly, we're going to talk about the Carlsberg. Carlsberg stand out with the best risk-adjusted performance. It has a moderate expected return of 0.0021 and a low standard deviation of 0.0023, resulting in a CV of just 1.128. This suggests strong investor confidence and steady return with manageable risk. So basically, above all of the 4 companies, Carlsberg offer the most favorable balance between risk and return. So that's it from me. Thank you very much.
Alright, so thank you my friend Aqimi Alhaq for his part. So madam, my name is Iskandar and I'll be presenting about the valuation findings and also the conclusion. So first, the bond. Intrinsic value is actually at 932 ringgit and 91 cents. So as we know, the par value is 1,000 ringgit. So the bond is actually trading at a discount. So it's good. And about the common shares, intrinsic value or DDM is at 16 ringgit and 31 cents and the market price is actually at 18 ringgit. So that shows that the share is actually overvalued. And lastly, preferred share dividend RM8 and the required return is actually at 11.2% and intrinsic value at 71 ringgit and 43 cents. That means it's a medium risk and fixed income type of return for the preferred share. Alright, last but not least, the conclusion. So TM is low risk but high CV, which is not that good. Heineken, high risk but low return, who would want that? And Maxis, extremely low risk, low return and risk, so it's not good either. So yeah, the best overall choice is actually Carlsberg, like Aqimi mentioned. And yeah, investors should really match the risk tolerance, plan everything out, see all the details like we've showed in our slides. And yeah, so in conclusion, bond is low risk, preferred share medium risk, and common share has the highest risk overall. So yeah, that is all from us, madam. Thank you so much for watching.